So let's understand the different types of credit rating agencies. The first is your sovereign rating agency or sovereign credit rating. This kind of agency, so this kind of rating is basically something which rates the government or which provides how good the economy is or how good a particular country is in terms of doing business, in terms of making investment there. So that type of rating agencies will be known as sovereign credit rating. Now they take into consideration two important factors or two important types of risk, which is economic risk and political risk. So basically credit rating indicates the risk level of investing environments of a country and is used by investors looking to invest abroad. Now second is your short term rating. Short term rating is for within a year credit rating agencies try to calculate what is the probability factor within a year that this particular establishment will be going bankrupt or will not be able to repay the loan. So the lower is the probability, the better is the rating, the higher is the probability, the worst is the rating. So a short term rating is a probability factor of an individual going into default within a year. This is in contrast to long term rating, which is evaluated over a long time frame. In the past, institutional investors preferred to consider long term ratings. But we also need to see that we do not go technically insolvent, hence short term rating is also important. The third one is your corporate credit rating. So here basically the corporates securities, which are the securities that are issued by the corporates will be rated. So it's not the corporate which is rated overall, but it is the security which is issued by the corporate. Let's say if the corporate is issuing a bond, so the bond that is issued by that corporate is rated by the credit rating agency, and that kind of rating is known as corporate credit rating. Now basically it happens that it will be denoted by, the ratings would be denoted by letters designation such as A, B, C and so on. Now let's see what are the top credit rating agencies around the world or in the globe. So the top three rating agencies in the world are Moody's, one, Standard and Poor and Fitch. So let's see them one by one. So Moody's Corporation basically started in the year 1907, where its founder L.M. Moody established this company, and he thought that it's always better to evaluate on certain parameters, different investment opportunities should be evaluated. And with this idea, this company was formed in 1907. In 1950, he wrote a book where he stressed that this rating should be, they should not charge any money from the corporates or the government to whom they are making these ratings, and this practice was there till early 1970s, but post that the transaction of taking money was already taken, and the credit rating agencies started accepting money from the parties to whom they are providing the ratings. Now it's not necessary that I need to go for the entire portfolio, rating of my entire portfolio with one rating agency. I can go for a certain portfolio with one rating agency, and another set of portfolio I can put it to a different rating agency. If I have a doubt that I have received a wrong ratings from one particular agency, I can switch the agency, or I can always take a second advice from another agency which will be evaluating my financials and other factors in terms of quality and quantitative, and will be giving me the ratings. So let's talk more about Moody. So Moody's Corporation is the holding company that owns both Moody's Investor Services, which rates fixed income debt securities, for example debentures and bonds, and Moody's Analytics, which provides software and research for economic analysis and risk management, which is the broader term of, or a broader function of a credit rating agency. Moody assigns ratings on the basis of assessed risk and the borrower's ability to make interest payment, and its ratings are closely watched by many investors around the globe. Investors worldwide pay close attention to the ratings which are assigned by Moody's and to the bonds or preferred stock and government entities. So Moody's rating go from AAA, that means it is a risk-free return, almost a risk-free return, a very stable investment, to C, where they say that chances of you recovering the principal remains really low. Now let's see what is Standard and Poor's. So in 1916, Poor's was one of the rating agency companies, and they merged or they purchased Standard Statistics in the year 1916 to become Standards and Poor's. So it is an American financial services company. It is a division of S&P Global that publishes financial research and analysis of stocks, bonds and commodities. S&P is considered as one of the big three credit rating agencies in the world. As a credit rating agency, the company issues credit rating for the debt of public and private companies and other public borrowers such as governments and governmental entities. It has been designated a nationally recognized statistical rating organization by Security Exchange Commission, that is SEC. The way we have SEBI in India, SEC is there in US, which is the regulator of financial markets there. So S&P issues both short-term as well as long-term credit ratings. The third one is Fitch, the third rating agency, which is very much popular in the world, is Fitch. So Fitch Rating is an international credit rating agency which is based out of New York City and London. The company's rating are used as a guide to investors as to which investments are most likely going to yield a return. It is based on factors such as how small an economic shift would be necessary to affect the standing of a bond and how much and what kind of debt is held by the company. So it functions as a more informed, not only in terms of risk, but more informed decisions, not only on the basis of risk, but also on the basis of your expected return based on the risk that these agencies assign to different investment destinations.